Silver isn't just a shiny metal, it's both a precious metal and an industrial workhorse. Today's silver price looks high by traditional standards, but to understand what that means, we need to look at history, supply, demand, inventories, and macro drivers. Silver is trading well above long-term averages, with recent rallies pushing prices of silver above $100 per ounce earlier this year. If you adjust the iconic 1980 silver spike for inflation, its peak would be closer to $180 to $200 per ounce in today's dollars, suggesting today's levels are historically high, but not unprecedented. Global silver demand continues to outpace supply. This marks multiple consecutive years in structural deficit. In recent data, total silver demand hovered around 1.16 billion ounces, while total supply was closer to 1.00 to 1.05 billion ounces, leaving a persistent shortfall. Industrial demand, used in electronics, solar panels, AI data centers, and EV infrastructure, is a major driver of this deficit, with industrial use alone exceeding 680 million ounces recently. This long-running deficit suggests that physical demand remains higher than mined supply, even with recycling adding supply each year. COMEX vault inventories, the silver that could be delivered against futures contracts, have fluctuated between roughly 266 million and 508 million ounces, with the most recent tallies near the upper range compared to the past few years. However, registered silver available for immediate delivery can be much smaller. Reports of around 113 million ounces available for delivery highlight how tight physical supply can feel. Silver, like gold and other commodities, is priced in US dollars. Over the past year, the US dollar index, DXY, a measure of dollar strength against a basket of major currencies, has fallen about 10%, from highs above 108 to levels near the high 90s. A weaker dollar makes dollar-priced commodities cheaper for foreign buyers, often lifting silver along with other metals. If the dollar strengthens, that effect can reverse. Another way to judge value is the gold-silver ratio, how many ounces of silver it takes to buy 1 ounce of gold. In recent years, that ratio has been above 80 to 1, meaning silver has been weak relative to gold. Long-term modern averages tend to sit between 60 and 70 to 1. This ratio implies silver may be undervalued relative to gold. So what could push silver higher? Continued industrial demand growth, persistent supply deficits, further dollar weakness. There are also substitutes. In some industrial uses, copper, aluminum, or conductive polymers. But in many high-performance or specialized applications, silver's unique conductivity keeps it in high demand. Silver's story isn't just monetary, it's where finance meets technology. Please like, comment, and subscribe.